Hello and welcome to GrainTV. It's the Monday edition, October 27th. Grain started the week on a positive note. Corn up 10, beans up 27, wheat a distant follower with a 4-cent gain. Logan, what's going on today?
You know, it was an exceptionally volatile day for soybeans in particular. Take a look here at this hourly chart. You can see that we actually gapped lower here to start the overnight session. A lot of trade talk of what was driving that was elections down in Brazil. Brazilians went to the polls on Sunday, re-elected the incumbent president. This was viewed as very negative for the Brazilian stock market, in addition to the Brazilian real. So the idea here is that if U.S. beans are going to remain competitive as we enter the second half of the marketing year, it's going to be a lot harder to get export sales to China if we see a Brazilian real, which is quite depressed as it was today. As a result, we traded lower. Once the day session opened, though, we had two large export sales reported here for soybeans, totaling about 230,000 metric tons, one to China, one to unknown destinations. And from there, it only seemed like those export inspections kind of added to that demand side power that we saw.
Exactly. USDA's weekly report on export inspections showed beans topping 2 million metric tons, just slightly above the analyst expectations going into the report. Corn and wheat a little bit on the light side, especially wheat, which came in only at 213,000 metric tons. You know, if we look year to date where we stand compared to last year, not surprising. Beans is exceeding last year's pace by 15%, but even corn, even though we had a rough week, we're still 43% ahead of last year. What's really troubling is the wheat market, where we're off a third from last year. This compares to USDA looking for only about a 22% drop in wheat exports. Right now, we're on pace for a 33% fall. So that's got to be dragging a little bit on the wheat market right now.
Yeah, absolutely. You know, kind of fundamental from a fundamental standpoint here, the big news after the bell was the crop progress and condition report that we just got in hand here. Take a look at this slide. You can see in terms of harvested pace, as expected, last week was very productive in terms of harvest pace. We're now 46% done on corn, 70% done on soybeans. Pretty large increases week over week, but this was right in line with trade expectations, looking for around 45% of corn, 70% of soybeans done there. So not a big driver in terms of harvested pace. We did get a confirmation week over week in terms of crop conditions. Not surprisingly, 74% of corn still rated good to excellent. So in this crop condition and progress report, not really a lot to drive this trade in the overnight. If we just look at the technical action today, we closed very strong today, and we broke through the highs from last week with conviction. So from a technical aspect, it does look like this market may still have some legs here as we move down the line later this week. You know, Kevin, on a day like today where we see a lot of strength out of corn and soybeans on the board, what kind of changes are we seeing in the basis market?
Yeah, the basis market really, we did have a really strong week, as you mentioned, on harvest, especially in the weekend. We saw some basis levels drop a little bit, but not overly so. You know, given the 15 to 16% pace in the last week, really the corn basis has sort of flattened out a little bit. We talked about it last week, probably hitting a low on the national level. There are some areas where we might see a little more weakness. Today we saw weakness in Iowa, especially some of these ethanol plants in Iowa were off about a nickel. Surprisingly, in Ord, Nebraska, an ethanol plant there was up 7. Some of the river terminals were up a little bit as well. I think we're still going to see some spottiness here in terms of weakness or strength, depending on availability. Beans was the one where we really saw quite a bit of sell-off. Not surprising with the harvest pressure, with the sharp run-up. I imagine farmers were probably pricing it off the combine pretty aggressively. The only exception where we saw any sort of improvement was a container facility up on the Great Lakes in Detroit. But everyone else was off about a nickel to as much as 10 to 15 cents in some cases.
Yeah, absolutely. Well, we've seen a lot of strength out of the export market when looking at soybeans in particular. We talked about it last week on GrainTV some. We've seen strength out of the Gulf. Today we saw strength out of that Detroit facility as well. You know, if you are out there harvesting this year's crop, corn and soybeans, we have a great cash marketing platform that can really help you get the most out of your cash sales. That really takes advantage of a lot of the data that we used here to make this presentation on GrainTV. If you want to take a look at that yourself, you can visit us over at grainhedge.com, or if you want to get those live quotes in the cab here as harvest is moving along, you can take a demo there of our great mobile trading platform. As I said, visit us at grainhedge.com if interested, or as always, call the office 877-472-4607. Have a great evening. We'll see you back here tomorrow.